SpaceX picks Goldman Sachs for lead left position on record-breaking IPO, sources say. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. That phrase matters. Lead left is the top underwriting slot. It means Goldman gets the most fees, the most prestige, and the most influence over pricing. They don't take that role unless they believe the IPO can move the needle at scale. Here's the context. SpaceX has been one of the most valuable private companies in the world for years. The last funding round valued the company somewhere north of $180 billion. That was in 2023. Markets have moved since then, and SpaceX's position in the space economy has only strengthened. Starship testing is accelerating. The Starlink network continues to grow. Contracts with the US government are expanding. So when Goldman takes the lead on an IPO, the market's first instinct is to assume the valuation is north of that last private round, potentially $200 billion or higher. But here's what's actually significant. This isn't just about SpaceX raising money. This is about the space economy finally going public in a way that institutional capital can access directly. For years, the only way to bet on space was through aerospace and defense contractors, satellite operators, or venture capital secondaries. Those vehicles were expensive or closed. An IPO changes that math completely. Goldman's role here also signals confidence in regulatory approval. IPOs don't move forward unless the underwriter believes the SEC, the FCC, and other agencies will clear the path. SpaceX operates under national security review for Starlink, and it has complex relationships with the Defense Department. Goldman wouldn't take lead if they thought regulatory friction was likely. That suggests conversations at the highest levels have already happened. Now, the contrarian angle, IPOs are not always accretive to shareholders. When SpaceX was private, Elon Musk had complete control. The board was small. Decisions moved fast. Going public means quarterly earnings pressure, institutional shareholder demands, potential board seats for index funds, and regulatory scrutiny that private companies avoid. Some investors argue that taking SpaceX public destroys optionality. The company loses the ability to take long-term bets without justifying them to the street every 90 days. That's a real trade-off. But the scale of capital available through public markets is enormous. If SpaceX raises $50 billion in the IPO, which is not out of the question at a $200 billion plus valuation, that's capital they don't need to negotiate with venture firms. It's capital they can deploy directly into Starship production, Starlink expansion, or entirely new initiatives like point-to-point transport or deep space missions. For a company with Elon's ambitions, that's worth the constraints. Here's what changes next. Watch the S-1 filing. When SpaceX files publicly, we'll see revenue numbers, margin data, and contract composition that have never been disclosed before. That transparency will reset expectations. Watch regulatory comments from the FCC and DoD. If there's friction, it shows up in the filing process. Watch competitor reactions. Blue Origin, Amazon's satellite provider, and traditional aerospace will all be monitoring this closely. An IPO legitimizes SpaceX's commercial position and potentially accelerates customer migration away from traditional providers. For Indian investors and entrepreneurs, this is instructive on a different level. SpaceX's path from private to public shows how space tech becomes institutional. In India, space remains government-dominated through ISRO. But if SpaceX goes public and captures global market share in launch, constellation operations, and in-orbit services, it resets the competitive pressure on ISRO and creates an example for how private Indian space companies should structure themselves. That's the second-order impact. The timing also matters. We're in a bull market for growth stocks. Tech is re-rating upward. The political environment in the US is friendly to space spending. If SpaceX times this IPO right, probably within the next 12 to 18 months, they could capture a valuation multiple that reflects not just current revenue, but the market's view of future space economy growth. That's the window. Miss it, and sentiment shifts. Goldman's lead role tells us that window is open now. They're betting on it. Which means the smartest money in finance has already decided, space is ready for public capital, and SpaceX is the story that proves it. What you do with that signal depends on your exposure to the space economy, your views on growth tech valuations, and whether you believe Elon's long-term vision justifies the risk. But the fact that Goldman is lead left? That's a vote of confidence you don't ignore. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.